Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Monday, January the 10th, 2011. Well, a continuation of the trend to the downside today. In the previous day's trading we had a candle that made a lower high and a lower low, which was the candle that changed the trend to the downside. Today we have a candle with a lower high but a higher low, fails to change the trend, so the trend to the downside continues. This, in bar chart terms, is an inside day. It denotes a day of indecision. So the market failed to take out the low of the previous candle, which is fairly important to this market. It does raise some doubt about the continuation of the trend to the downside. Now, if we look at the past three candles, we have a very small red body on the top of these candles, and certainly not the sort of candles that we'd like to see as a market is beginning a new trend to the downside. The small bodies of these candles are towards the top of the candles, and that denotes the bulls closing the market with some sort of control. In the case of today, fairly strong control on the day's trading. Previous day, moderate control, but still closed the market in control. The red body also means that the sellers have only made a small amount of net bearish progress on the day between the open and the close. And the long shadows on the bottom of the candles represents buying coming in, and it represents the sellers actually losing commitment as the market was trading down towards these lows. Now, the loss of commitment with these two candles over the previous day coincides with support at this area around 1265, and that was a previous area of support and resistance. So it's little wonder that we saw the bulls coming in around these levels. It also coincides with this swing high roughly around 1262 or so, where the market found previous resistance, and we know that resistance can turn into support and vice versa, and that's exactly what's happened here. So over the next day's trading, certainly the area at 1265 and 1262 is very important if the market is to continue the trend to the downside. The market has failed to close down below this 1265 area, so that's quite important. Now, just looking at the Ichimoku indicators, we are still trading up above the cloud, and we've been trading above the cloud for a long time, so the market retains its overall bullish bias. We are trading up above the Kijun-sen, which is the pink line here, and that tells us that the market is bullish in the medium-term time frame, and that indicator is pointing up fairly sharply, reflecting the strong upside momentum that the market's had over the last few months. Just looking at the Tenkan-sen, the green line, the market is still trading up above there, so the market is bullish in the short-term time frame, but that's starting to flatten out and represents this small retracement or this congestion area that the market has moved into over the last few days. Now, if the market's going to come off, then we do have potential support, obviously, at the 1265 region that we mentioned down to 1262, but also at the Tenkan-sen, and we can see that that coincides with this area where the market found support previously, so that's an important area. Then certainly down to around the Kijun-sen, which is at 1247, and just above there where the market found support around roughly around 1250. Down below there we have strong support around 1219, and certainly down to the top of the cloud, which coincides with the round number 1200, so very, very good strong support down below. To the upside, we don't have a lot of strong resistance, only the resistance around the swing high, roughly around 1278 to 1280, and that's a very important level for this market, but certainly no strong resistance until the market trades up to the round number 1300, so there's a very good chance that the market will change trend to the upside, test the 1280 area, possibly take that out and trade up to 1300. No definite time frame that it will do that in, but the rejection of the market down around these lows, around this 1265, certainly does look like the market is being set up for a new change of trend to the upside. So that makes the high of the current candle very important for a potential higher high and higher low over the next day's trading. So that's the areas to watch. The high of the current candle, which is at 1271, but certainly down around 1265 to 1262 for any potential continuation of the trend to the downside.